Next up, insurances. I don't think that it's necessary to redo your insurances every year. Matter of fact, in many cases, for things like life insurance and disability insurance, the real people insurances, you really don't have cause if you've done the right work on the front end to just consistently be shopping that coverage. If you have not purchased the appropriate policies outside of your employer, remember, we think that employer plans are the icing, they're not the cake. Then for life insurance, I would encourage you to use a basic life insurance calculator to estimate your needs for coverage and to make sure that you own the right amount in an individual policy. We'll put a link in the show notes to a calculator that we use from a nonprofit called Life Happens that will allow you to, based on how much income you're trying to replace and for how long, if you have children and you're trying to make sure you provide for their college costs, things of that nature, we'll go through all of those variables and tell you how much additional insurance you need. For disability insurance, even if you have your own coverage, you want to make sure that you read through your employee benefits to make sure that your income is fully protected. In many cases, things like bonuses and overtime pay are not covered by group policies. And if you're an exceptionally high income earner, in most cases, depending on the plan, that's going to be over 100,000 of income or 200,000 of income. There may be a cap on the benefits that your group policy will pay, and any income above that would be unprotected unless you secure an individually owned disability insurance policy in addition to your workplace plan. For things like property insurances, like homeowners insurance, you want to make sure that you assess whether your home has increased in value to a degree that your home insurer isn't aware of. So, for example, if you're one of the lucky people who moved into a hot area of town before it became a hot area, or you just have some finishes in your home that cost a certain amount when you bought it, and over the course of time, it will cost a lot more to replace, you want to make sure that your homeowner's insurance coverage reflects the full replacement value of your property. So, for example, if you have $200,000 worth of replacement value and you have a home that would take $500,000 to replace, not only can there be some penalties in terms of how much you would be paid in the event of a total loss, but there's also the basic element of the fact that you have a home that's not fully insured in the event that there is a total loss and you wouldn't receive what you need to start over. So in addition to shopping rates, which with people insurances I wouldn't do frequently, with property insurances, I typically wait every 2 to 3 years to do so. You also want to make sure that the base elements of that coverage are appropriate as well.